We just had the lowest close for the VIX. You have to go back to November 2021 to find a day where the VIX is going out this muted. And that doesn't necessarily give you what the next 5% in the market will be. And of course, markets can remain overbought and continue to trend higher. I just personally feel if you've ridden a lot of this rally up already, why are you out there looking for new stocks right now or adding to stocks that have just gone up 20, 30, 40%? For me, that's not the move to be making. I don't think we're going to have a horrible spate of earnings from the FANGs. I just feel like it's going to be very difficult to justify continued upside given what we're already going into this earnings season with.
Do you worry about what we're calling the vaporized volatility? The fact that the VIX, as you said, was at 16 and change. It's barely at 17 now. And what the potential message in all of that might be?
Worry's not the right word. I worry about everything. I worry about carbs. You're always going to have things to worry about. Here's the issue.
Complex carbohydrates are bad.
Here's the issue. If you ask me, why did the market take off like a rocket ship in March? I couldn't have told you in real time. But looking back, it's very obvious that positioning was so offsides. And I could cite like 50 different stats, but like the big one for me, you look at exposure from hedge funds, what they call large speculators when they look at shorts in the E-mini. You really have to go back a long time to find a period of time where the hedge funds were so heavily either hedged or fully betting against the market. That unwind, what that looks like in practice, is the FANG stocks exploding and this kind of VIX collapse, but it doesn't go on forever. So I'm not saying hurry up, get out. I'm just saying, like, all right, we've had a really nice rally. We have some pretty crucial data coming up from some very big index weights. Why do I need to be getting bigger here?
Right.
I don't need to get any bigger.
All right, Steph. So let's go in on some of these earnings. We'll come back to the market. I do want to bring up some other things related to that after we kick around some names. And Bank of America is the first one I want to go to, which Jim Cramer said, I thought this was Brian Moynihan's best quarter ever. You own B of A. You bought more recently when you bought Schwab. So, another bank that you can tick off the list that's reported. What's the message here? Stock's not doing all that much. What do you think?
Well, the stock has rallied in the last couple of days, right? But I thought the quarter was absolutely fine, very good. The only thing I didn't like was the expenses. The efficiency ratio is a little bit higher because I think of Bank of America as an operating leverage story, right? Costs come down and revenues do better and you get a much better bottom line. Well, you did get that, but it was because the top line was actually much better than expected versus the expense side. But I mean, if you look at debt capital markets, you look at FIC, you look at net interest income, all much better than not only expected, but also versus the peers. When you contrast that to Goldman, that was a hot mess, in my opinion. And I think across the board, FIC was disappointing, debt capital markets disappointing, expenses way disappointing. So that stock should be down. I don't think Bank of America should be down. I call earnings season silly season because you get silly reactions.
Okay.
This is an opportunity, I think, to be buying, and I probably will.
What about you, Jason Snipe, on Bank of America before we move on to Goldman, because you own that as well? Do you look now, do you say, okay, by and large, these are better than feared?
Absolutely.
And you want to be tactical, as Steph said, and take advantage of some of these moves and buy a stock which people routinely come on and say, B of A, more specifically than most, below book value. It's this, that, and the other thing. It's so super attractive, but I don't hear many people come on and say, and I'm buying it as a result.
Yeah, and I think for Bank of America in particular, I mean, if I look at the banking sector, period, earnings expectations came down dramatically, and these numbers for banking have been great. So as a top, as Steph already mentioned, this beat on the top and the bottom line. I always look at the banks, as particularly the money center banks, as a real good call on the consumer. The consumer is still hanging in there. So I still like the name. I'm not going to add here. I got a market weight position, but I feel comfortable with how the report is looking.
Then there is the Goldman Sachs deal today, which is, as I said, Jim, one of the biggest weights on the Dow. It's a capital markets play more than a money center bank, obviously. The environment is depressed in terms of deal making and IPOs and all the things that make Goldman Sachs Goldman Sachs. What do you do, though? Steph called it a hot mess.
I think that was a good description, Steph. It was a hot mess, and for the reasons that she highlighted. I'm sticking with the stock. I think you are supposed to stick with it here. At the end of the day, let's not forget that this is a highly profitable bank. I mean, yes, they did beat on this quarter's earnings. Return on tangible equity was almost 13%, and that's below where they want it to be. I think when you put those numbers together, what you realize is this is a company that even in a bad quarter, this was a bad quarter, had enough cash flow to buy back $2.5 billion worth of shares. That's, against a market cap of roughly $100 billion. They're going to do more than that in good quarters, and the good quarters will come, whether it's deal making picking up or what I think is probably the most important is them getting back to their roots. The foray into consumer lending, consumer finance was simply a mistake. They've recognized it, they're correcting from it, and I look forward to them getting back to their core roots of simply servicing high net worth individuals and very high quality companies. That's going to be profitable.